Welcome to Drill Down Earnings. We have fiscal first quarter results from Elastic. The numbers were challenging. The guidance maybe even a little bit worse. Let's talk about this stock on the move. I'm Cory Johnson, Chief Market Strategist. And when we look at Elastic earnings, Q1 fiscal earnings for them, while the numbers beat estimates, the guidance was less than had been hoped for. And there were some concerning numbers about customer growth. Let's talk about all of it. So $347 billion in revenues, that's up 18% in constant currency. They like that. Their Elastic Cloud business up 30% on a year-over-year basis. So the business is solid, it's growing. But there were some interesting challenges, what they called with segmentation changes that they made at the beginning of the year. And it was a challenge to add customers, even though revenues, as I mentioned, growing 18%, growth holding steady. Now their losses are also maybe not as bad as they had been, but still losing 10% in terms of operating margins. But the number that really jumps out is the customer growth. Their customer growth has been very low to flat for quite a while. So they're getting more out of every customer. The average customers paying more than $100,000 are growing at a nice rate and are a bigger percentage of the company. But with just 1% growth in the number of customers, it's an issue. And then these segmentation changes, well, it led to kind of weak guidance going forward, and the stock really tanked down 25% in after-hours trading. That's after being up 74% in the last year. So still outperforming the S&P 500 by quite a bit, but really getting hurt in after-hours trading today. Now, what was really interesting about these results also is that those higher paying customers are, helping them stem the tide, if you will, of the slow customer growth. So the high-paying customers paying more than $100,000, there were actually saw 3% growth in those types of customers, as opposed to 1% growth on a sequential basis of their total customer count. But when asked about kind of what gave them confidence, Ash Kulkarni, the CEO, a friend of the show, he's been on the show before and we're a big fan. Ash talked about how they want to reduce the risk to customers, about the way they use their services and software, and how he thinks that that's ultimately going to lead to more bigger deals in the future.
What we want to do is reduce the risk, reduce the effort, and make it easier for customers to switch over. And that's what we've been leaning in. And this then gives our sales teams also a lot to go and talk to customers about. It's just a very natural thing for them to lead with. And so I'm very confident that this momentum is going to continue. And like I said, the impacts, the near-term impacts that we saw from some of the segmentation changes, the fixes are within our control. We are already acting on it. And with these kinds of things that we are doing for driving migrations and consolidation onto our platform, I particularly am very confident and excited.
So confident and excited, more than you could say for a lot of the shareholders right now. Maybe brighter days are ahead for Elastic, but maybe not reflecting the stock price right here. Let's talk about one number that means a whole lot, the Drill Down Earnings Bite, right after this.
The Drill Down is brought to you by Futurum Group, where analysts, researchers, advisors, content creators, and marketing experts help business leaders anticipate and understand shifts in their industries and build strategies to leverage disruptive innovation. With deep analysis, Futurum Group's extensive industry experience delivers reliable research and data, thought leadership, and actionable advice to help you with your strategy and go-to-market efforts. Futurum Group.
So Elastic has just reported first quarter earnings. Let's get a summary of these results in one number that means a whole lot. Your summary is that revenues are great, up 18% on a year-over-year basis to $347 million. But the customer growth was not. On a year-over-year basis, here's the number to remember, customer growth was only 3%, even though revenue growth was 18%, and that's just not great. All right, thanks for listening to Drill Down Earnings. I'm Cory Johnson. And check me out on X at Cory TV, at Drill Down Pod, on TikTok, and on Instagram. You can leave comments for us there. Let us know what you think. Let us know what you'd like us to cover in the future. Check out all the rest of our offerings.